All right, what's up? It's Ruben from TG. In today's video, I want to talk to you about a 0-day trade that we did on IWM. We netted a 66% return, and one of the members already 12x their return being in the membership just from being in the private Telegram channel. All right, so let's take a look at the wins here for today. Deborah, $900. She's already made over $2,500 ever since trading with Inside TG. So good for her. Like she's winning. She already 12x her return. Kevin scored on IWM with us, and he gave me the legend status confirmation. So that was awesome. And so today we traded IWM. We crushed it. And I want to go over this trade. Okay, I want to go over this trade. It took about 20 minutes, 18 minutes, about 20 minutes. It didn't take very long, and I want to go over how you could do it. I want you to actually like read this right here, and I'll read it for you, of course. But this is really important, okay? Because if you ever, one of the most common things I get from traders is like, "Hey, Ruben, I followed the strategy, and I thought I understood it, but when I took your trade, it didn't look anything like the strategy." This is very, very a common confusion that a lot of new traders get, and it's because most amateur traders, and you might be in here too, you'll trade the playbook, and there's nothing wrong with the playbook. Everybody starts with the playbook. I give all my members the playbook, and I put it here on YouTube as well too, because it's the playbook. Like this is how I trade, right? But the subtle differences between amateurs and pros are: one reads the playbook, and then the pros read the moment, okay? And you need to know the playbook first before you can read the moment, okay? And so this is really important. At some point, you want to transition from amateur to pro. You want to go from the playbook and then learn to read the moment as well too, okay? That's how you're able to make these transitions from amateur to pro. How to be more of a consistent, profitable trader, okay? So because when you trade the playbook, when you're in real-time market hours, you can trade the trade book, and then you get stopped out and you're like, wait a minute, like it just ripped, right? But it's because you're just missing this component. And this usually comes with experience. And you can accelerate this process by just hiring a coach, or just if you can find them for free, that's awesome. Just find people that are better than you. If you can spend more time with people that are better than you at trading, and they have traits that you're looking for, just spend a lot of time with them, and just listen to them talk, so you can see how they are um, absorbing all this information, and like how they're reacting, because a lot of trading is very situational, it's very dynamic. Yes, I could do if I'm playing a sport, I can pass. But if an experienced trader will look at the field differently, right? A sports player will look at the playbook and will play the playbook strategy. But a pro sports player, they'll do the playbook, but they see the field differently. And if they see a shift in something that doesn't make sense, they will shift their strategy slightly to adjust for those changes in the field, right? So that's what makes the difference between a pro and an amateur. And it's the same thing for trading. All right. So let's go over the IWM trade here, because this was a really good trade. And I want you to be able to do the same thing too. Okay. So I did execute this on the 15-minute, I believe. I was looking at the 15-minute. And in the morning, the first thing I do every market session, okay, is I mark the daily key levels, because key levels change, okay? And I don't do it the way you typically do it, or the way you typically see on YouTube, where it's like, let's go to the hourly time frame, see how many touches it hit here, and count 3, 4. Oh, that's a key level. That's not key levels. Okay, key levels are based. The way we do key levels here inside TGE is that we do them based off the option premium. Okay, but that math is complicated. So we have Gextron to automate that for us. That's what Gextron is for. We let Gextron and software do the hard work for us, so we don't have to think about it. Okay, because when we're trading, we are in the moment, and we have to be more reactive than trying to focus on math, right? We know how to do it, but we can't be doing it manually during trading hours. So we go to Gextron, and I look for tall bars. That's it. I look for tall bars, and I look for the start of the green sticks and the magenta stick colors, and then I mark them here. And in this case, you can see here, if we look at the 30-minute time frame here on IWM, I'm actually going to remove this, and I want to come back to this later, okay? You see P trans here. This is the start of a positive transition, and N trans is the start of a negative transition. So if price goes below it, you should be more bearish. If we're above P trans, then you should be somewhat bullish on the security, so on IWM. And then we look for these tall bars, whether they're negative or positive, and we mark them, and that's our support and resistance. So we had 210, we had 205. Okay, great. That's the hard work. That's all the hard work that we did. We just figure out the tall bars in the transitions, and that is our support and resistance lines, depending on where price is coming from. Is it coming from the top? Is it coming from the bottom? Etc. So they can flip. Okay, the next thing is these DEM lines that you see here, right? It says DEM, DEM. What does that mean? Okay, Gextron does this too, because besides looking at the option premium for daily support key levels and resistance levels, it also forecasts the ranges of the current price of the stock, and it says, hey, based on from this current price, from here until a specific expiration date, here is the possibility of it going up and down. So the top up and down movements for the stock. So for IWM, as of right now, it only has $1.47 move to the upside and to the downside. And you'll see here these columns says top and bottom. It says 210 is the top and 207.97 is the bottom. And all I do is just copy, and you see a little checkbox, and then I just go to my charting tool here, which is trading view, and then I just paste it. I just say it like this. I just paste it. But I like to do this first thing in the morning. Okay, and so you can see here the daily expected top was 209.49. That's what I recorded, and the bottom is 206.13. Okay, that's it right now, and this is very powerful because you're seeing this in real time. Most of the time, when we hit either the top or the bottom, it's a good reverse or mean reversion trade, or a reversal there. Like, it's possible that it has a very high likelihood of it stalling out or reversing. It can go higher and it can go lower, but most of the time it will reverse around this area. And you can see here it went slightly above, and now it's just rejecting, right? So that's that. Okay, so how did we trade this? How did we get that 66% return? And I'm going to show you here so you could do the same thing, okay? I have one indicator here, two indicators, volume and VWAP. I like them both. These are the only two indicators that I approve of, okay? And what happened here is that we had these massive aggressive sell-off here in the beginning, right? And what we did, I'm gonna cut this down a little bit here so we're not distracted with the current market. And then what we did here was, okay, we said, okay, look, P-trend, IWM is above P-trends right now. If we had a massive sell-off, it tried to go below N-trends, but it couldn't do it. It went back to P-trends. So that's bullish thesis number one, right? And then price started to sit above this. I believe I took this in the 5-minute, or it must have been the 5-minute, near around the 5-minute. Okay. So then price now was sitting above VWAP. That's okay. Bullish thesis number two. Like, it's, you see how, like, when I'm looking to enter a trade, I'm getting all these components to build a thesis, right? To give me confidence into going into a trade. And three, we had news about Trump talking about resetting the negotiations or something like that with China. So that was another component, right? And so we took the trade around 10:58 time frame, which must have been around this zone right here. And I said, okay, we're gonna aim for near the daily expected move. That's it. And so from here to here, we sold somewhere around this area. We took our 66% return. And that's not a big move. That was just like $1 move for a 0 DTE. That was it. I didn't need to catch the total bottom. I could have done a better entry maybe around this area, but I wasn't. This was such a volatile candlestick that I wasn't too sure about. So I said, I don't know about that. But I did see high volume here, right? High volume, a lot of buyers around this area. So I was like, okay, let's see if we can catch this zone somewhere around here, right? And that's what we did. That was it. It doesn't get more complicated than that. Now let's fast forward to current market conditions, right? Current market hours. You can see that we're rejecting very hard off this DM. This is why this is very important. Tickers move in expected moves. They have expected moves every day, every week, especially every quarter, based on quarterly cycles. And once those expected moves are met, typically you want to do the reverse. Either if you have like a long position, you might want to hedge your position. Okay, this is why it's important to know expect a move. This is much better than your MACD. This is much better than your RSI. Which reminds me, let's open up the RSI or the MACD. Let's go to MACD here. I want to show you this, okay, because this is why I hate the MACD. Okay, we bought around here and we sold somewhere around here, right? If you were to follow the MACD, you would have probably entered in this candlestick. You're like, I'm waiting for the candlestick to be green. And you probably would have waited until this was like probably closed. So you would have bought here, okay? And maybe, well, maybe you would have sold here. I don't think you would have gotten a 66% return from here to here. I don't think that's possible. If anything, you're going to get rejected. MACD cannot confirm this rejection. Gagstron can tell you that there's a high likelihood to reject around this area because of the daily expected move and this area of interest, right? There's a lot of resistance being built up there. So that's a good reason to take a rejection position or to not even take a long position. Probably you would want to wait until we get above this level, okay? But MACD, this is why I say like, okay, now MACD would have told you, hey, we're oversold right here. Okay. And then you would, yeah, you would have waited all the way for the green candlestick here, which would have been here, and that's it. Now, look, this is the thing, the other thing about MACD. The MACD hasn't turned red yet on this time frame, right? Still not red. But if you would have known the daily expected move has already been met at the top, you could have started a position here and then ride it out to the VWAP, ride it back to the P-trans level, and maybe even get below N-trans. But probably what's going to happen with the MACD is that it will turn red probably around this level right here, which is a support zone on IWM. And the thing you want to do is not take a trade near a support zone. You want to wait for it to confirm down, right? This is why I say the MACD does not work. MACD strategies do not work. Get it out of your toolkit. It's outdated. It's old. It does not work. What's important in the market is option premiums. The Greeks, that means the delta, gamma, implied volatility, theta, and you use that to make better educated guesses. Okay, and you can look at also the option tape right here, which is at the bottom. I'm just gonna here at the bottom, and you can see, oh, okay, puts are coming in. Understand what these color codings mean. People are buying puts at above the ask. They're buying in the middle. They're selling calls here, buying puts for IWM since 1156. These are your best tools to give you an edge in the market. So again, if you want to go from amateur to pro and learn to be able to read the moment, these are the kind of tools that you need. Okay, I'm going to leave a bunch of links in the description box. If you want to trade with us, I'll put a link there. If you want to try out Gagstron, I'll put a link in there for you to give it a shot and you could book a call. If you have any questions about how to trade zero DTEs like the way I did, leave them in the comments and I will answer them. I will answer to you. I'll get back to you. All right. That's it for this video. I hope this was helpful and I will see you on the next one.